So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower. I think Bitcoin's going to hit a numerically interesting number. Now, obviously, I put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason. We're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio.
Arthur Hayes maintained his positive thesis for Bitcoin after the Federal Reserve's dovish shift in early 2025, expecting that sharp increases in budget deficits and liquidity injections will drive cryptocurrency markets into a new supercycle. A surge in institutional inflows and anticipation of more quantitative easing originally caused Bitcoin to soar from $68,000 to $105,000. But the surge quickly came to a standstill, and as markets processed conflicting central bank signals and geopolitical uncertainties, prices began to decline below $90,000. Hayes sees this decline as a healthy stop in a long-term upward trend propelled by unrelenting monetary devaluation rather than a sign of weakness. He cautions in his most recent piece that risky assets like Bitcoin will soar when the actual wave of liquidity strikes. Additionally, he draws attention to the increasing instability of the global financial system, citing China's debt trap, Japan's dominance over the yield curve, and America's soaring deficits as major contributors to what he refers to as the everything pump. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And so how are those measures coming in right now from different central banks that you're tracking, the liquidity within those? Where are we right now? Have they been going up? What is it telling you?
So I think post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of this, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent, inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm going to do my own thing, right? Yeah. I'm here to solve inflation. Shut the fuck up, Trump. Like, I don't care about your policy goals. Then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS, QT, U.S. Treasury quantitative easing, because now you're effectively buying treasuries with printed money. As crypto investors, if Trump does 50% or he does 2%, it doesn't fucking matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower. I think Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio. I don't think you should really trade based on a particular price target. It's more, how do you think the expectation of what fiat liquidity growth has to happen to justify this price versus the reality of what's going on and what the politicians and the central bankers are actually saying, right? Because in November of 2021, everybody thought the moon, we're just going to keep printing money and blah, blah, blah. And then, Powell said, hey, we're going to start tightening money. I think it's at the December meeting, we're going to start raising interest rates in March. And essentially around that time was the peak of the market, right? So I don't think it's a number we should have in mind. It's, do the central bankers and the politicians think that they've gone too far in this sort of fiscal expansion, money creation? And when that zeitgeist changes in sort of the TradFi markets, we have to be cognizant of that. And then regardless of where the price is, it doesn't matter what the nominal level is of the things in your portfolio, you have to get into safety, because it doesn't really matter at that point.
Because of the U.S. tax season, April is typically a difficult month for the markets. People and companies frequently liquidate assets to pay taxes during this time, which drains funds from the banking system and lowers liquidity. Arthur Hayes notes that the way the U.S. Treasury handles its funds, particularly its Treasury General Account checking account at the Federal Reserve, is another important consideration. Market liquidity may actually increase if the Treasury, under Janet Yellen's leadership, maintains the TGA balance low and instead borrows more from the Fed. Hayes thinks that by using these cash management techniques, Yellen and Fed Chair Jerome Powell may cooperate to boost market liquidity. In spite of seasonal challenges, that could be a tailwind for Bitcoin and other risky assets, pushing prices upward. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold. Gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building and sort of technological developments were much more rapid. These days, the amount of changes that happens at Bitcoin Core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. And so that's why I spend all my time looking at liquidity, and that's all I care about. And so if it's a 4-year cycle, it's a 4-year cycle. And if it's not, it's not. I think M2 is such a convoluted measure because it's defined differently in every single different country,
Okay.
and reported differently. And so I try to keep things as simple as possible and track the least amount of variables. And so right now, all I'm looking at is the United States, China, Japan, and Europe, and so EU. And that's all I care about. And obviously, there's a lot of other central banks and countries out there in the world, but those are the four major ones. And I track bank credit, so how much credit is being emitted by the banking system. Somewhat difficult in a lot of jurisdictions because of how infrequent the data is published. And I also track central bank balance sheets. And usually most central banks report that on like a weekly basis. And what are they saying about what their plans are for the future and how they're going to change whether the price of money, the interest rate, or the quantity of money, quantitative easing, money printing, all those sorts of things. And so that's kind of what I look at.
Do you have an idea based on the global liquidity and the kind of things that you look at, people you listen to, your kind of insight?
April's a tough month usually because you have tax season in the US. So April 15th is tax day. When you pay taxes, you sell things. There's that. There is the sort of the debt ceiling issue. Obviously, when the Treasury runs down its checking account, that's a positive for liquidity conditions. However, on the flip side, once the debt ceiling is resolved, usually they refill their coffers. So Besant has a choice. He could run down that Treasury's account and then say, actually, going forward, we're no longer going to run an $850 billion balance in our checking account. We'll just run it down to zero. And if we need more money, we'll just borrow it from the Fed. They could do that. Again, it's a policy choice. It's how well do Besant and Powell get along and want to coordinate sort of the best way forward to achieve Besant's goal, which is I want a low 10-year Treasury yield. If Besant wants a low 10-year Treasury yield, Powell is doing his part by reducing QT, hitting at QE for Treasuries, saying that inflationary effects of tariffs are transitory, meaning he can keep doing what the fuck he was doing before. And maybe Besant is going to come out in the next quarterly refunding announcement in early May and say, actually, we're going to run down the TGA to zero and then we're going to keep it there because anytime we need extra cash, we'll issue a bill, a Treasury bill, or we'll just go borrow from the Fed and then pay them back later when we issue some more bonds.
According to Arthur Hayes, when Bitcoin was a smaller asset class, its market cycle, especially the well-known 4-year halving cycle, made a lot of sense. The changes in profitability and technological improvements at the time fit in nicely with the general market cycle. But now that Bitcoin and cryptocurrency have developed into a respectable asset class, central banks around the world are regularly discussing and analyzing them. Bitcoin and its place in the larger financial system are currently being discussed by the leaders of major economies, including the United States. According to Hayes, Bitcoin has evolved from a digital bear asset to a vital worldwide indicator of monetary liquidity. Bitcoin is being driven less by technology advancements and more by monetary liquidity. Technology breakthroughs and the growth of the Bitcoin ecosystem in its early years made it more inventive and turbulent. Bitcoin's basic technology is changing more slowly these days, and the majority of protocol updates happen gradually. Hayes highlights that fiat liquidity, the quantity of money issued or destroyed by central banks, will continue to be the primary factor influencing the price of Bitcoin. He concentrates his efforts on monitoring the amount of money entering or leaving the system. Furthermore, Hayes notes that although the U.S. tax season usually results in liquidity concerns, people sell assets to pay taxes. Liquidity can tighten outside of April as well. Short-term liquidity is greatly influenced by the U.S. Treasury's control over its debt ceiling and checking account balance. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.